Hi everyone. So I wanted to start a blog to track my progress on my goal to reach $1 million investment portfolio, but also because I wanted to share a different investment thesis to the one that I see on the vast majority of personal finance blogs on YouTube. In my view, due to the irresponsible fiscal and monetary policies pursued by the US government and the Federal Reserve over the last 3 decades, the US is heading to either a sovereign debt crisis in which the government won't be able to meet or service its debt obligations, or we will see a hyperinflationary crisis where the consumer prices could end up doubling every few months. But regardless of which of these two scenarios end up materializing, the value of the US dollar is going to fall dramatically both in relative and in absolute terms. So I have designed my portfolio in a way that it will thrive in either one of these scenarios by allocating between 70 to 80% of my portfolio into gold and silver mining stocks, as well as some other basic material, basic metals mining companies. The remaining 20% of my portfolio, I've put it or allocated it to international stocks from countries that have better fundamentals than the U.S., such as Switzerland, Korea, Singapore, or Russia, or even Russia. You can see that the vast majority of my main positions are gold mining companies such as Newmont, Kirkland Lake Gold, B2 Gold, Anico Eagle Mines, and my largest positions outside of the mining sector are in companies from the United Kingdom such as Shell, BP, or Switzerland, where you can see I have a relatively large position in Nestle or Roche, and then I also have some exposure to Russia with the Sberbank. That's the biggest bank in Russia. Lukoil, a Russian oil company. Now I opened my Robinhood account all the way back in 2017, but at that moment I wasn't very confident in putting too much money into stocks. It wasn't until 2019 when I saw that the Federal Reserve basically did an about face on their policy to normalize interest rates, that I decided to start investing aggressively in gold stocks. And you can see it very clearly here, how the Federal Reserve has changed the general interest rate over time. And you can see for that after the crisis of the Great Recession, the interest rates were basically close to zero, and then in 2016 they started attempting to normalize the interest rates. They got all the way up to 2.41% before the stock market started convulsing, and then they had to stop raising interest rates and actually start again dropping them rather precipitously in order to keep the US stock market bubble going. So ever since then, I've been trying to put as much money as I can mainly in my gold mining stocks. With every 2 weeks, with the paychecks I get, I try to continue to put money in these stocks. And so far it hasn't produced amazing returns, as good returns those portfolios that are more invested into growth stocks, taking a bit and more with more exposure to tech. But that's okay. Um, I'm not investing for the short term, so I think that in the end, my stocks uh, will perform very well once that final crisis takes place. Unfortunately, while those high growth stocks will um, be impacted substantially